See, yesterday we discussed about EOQ, and what we discussed was economic order quantity is the ideal quantity at which you have to maintain your inventory in the business. Okay, because that is the level at which your inventory cost, the total cost of inventory, which is nothing but a combination of ordering cost and carrying cost, will be the least, and we have already discussed about that in the previous sessions. But yesterday we discussed that there will be some scenarios or instances whereby you have to purchase, you will be compelled, or you would be you would be kind of they will attract you, the suppliers will attract you with good amount of discounts if you go for bulk purchases. And you may not be in a denial mode that point of time. Why? Because everyone in the world wants good benefits. Okay, and we have to see whether availing the discount, okay, and buying the inventory is good, or maintaining the inventory at EOQ is good. So this is a universal statement that EOQ, in the sense, not universal statement, I would rather say not always true, because here we would be able to prove that EOQ at times maintaining the inventory levels at EOQ would not be that feasible or that profitable than taking the bulk discounts. I mean to say, you would be more beneficiary, or you would be benefiting more by taking the bulk discounts. So we will prove when and at what scenario it will be good for you to maintain the goods, maintain the inventory levels at economic order quantity or EOQ, or when it will be better for you to take discounts for bulk purchases. Okay, so we will do a comparative analysis, and we will we will take a practical approach here, and then we will get the answers for the questions what we are looking for. Okay, whether to maintain the inventory at EOQ, or whether to take discounts, whether to buy in bulk and avail or get discounts. Okay, let's go for this question. So the annual demand for an item of inventory is 45 units. That means usually the business always buys 45 units. That is their usual practice. Okay, I think all of you are following my voice and everything is clear. Fine. So the item is costing $200 a unit to purchase. So this is the purchase cost. Holding cost for one unit for 1 year is 15% of the unit cost. So this is your unit cost. 15% of this is your holding cost. I have already discussed with you what is holding cost. The cost of holding the inventory. Okay. And the ordering costs are $300 for one order. Now, what they are doing, the supplier offers a 3% discount for orders of 60 units or more. That means the usual practice of buying 45 units, if you breach this, that means if you buy 60 units from them, the suppliers, they are going to offer 3% discount to you. And if you are going to buy 90 units or more than 90 units, they are going to give you 5% discount. Now we will see whether we have to maintain the inventory levels at EOQ, or we should go for discounts. Okay. Now, required, calculate the cost minimizing order size. That means what is that size of order or order size at which your cost will be the least or minimum. Okay, so for such kind of questions, first and foremost you have to find out the EOQ, and you know the formula of EOQ, under root 2 COD by CH, whereby CO is ordering cost, just a second. Can you hear my voice right now? Just a second, just a second. Hoor, can you hear my voice?
Yeah, I can hear you, sir.
Yeah, I think your connection is having some problem. Kya check na Hamsika, because Hoor is able to hear my voice, able to see the screen and everything. Yeah, please check it. Huh? Yeah, yeah, and please like join. Huh? Okay, I'm waiting. Yeah, yeah. Hoor, the screen is visible, na?
Yes, sir, it's visible. It's all
Okay,
right.
okay. Let Hamsika join. She's not able to hear the voice. Yeah, can you see? Can you hear my voice?
Yes, sir. Now I can.
I'm just calling many a times to you. Hamsika, can you hear my voice? Can you see the screen? But no answer. So right now only I got the answer
Okay.
from your side. Acha, you just typed also. Okay, okay. Now everything is all right. Everything is audible. Everything is visible,
Yes.
correct? Yeah.
Yes, sir.
So now what we were discussing is, what we were discussing was how to find out the economic order quantity. The formula for finding out the economic order quantity is under root 2 COD by CS. That means this is ordering cost. This is the annual demand. And this is the holding cost. Okay, that's one. So now let us put all the things in this formula. So 2 into this is your ordering cost 300, and when it comes to annual demand, it is 45 units already given, and then you know the holding cost is nothing but 15% of the purchase cost. So 200 is the purchase cost, and of that 15% is your holding cost. So we have taken that, and the economic order quantity what we got is 30. Okay, now first case, there is no discount when you are maintaining your inventory at economic order quantity. That means you are not going for bulk purchase, only keeping it restricted to 45 units. You are not going to get any discounts. So what we are going to see is what is the cost if we maintain things at EOQ. Okay. So you know, if I maintain my purchase to 45 units, if I maintain my purchase to 45 units, I'm not going to get any discount. So my purchase price is 200. 9,000 is my purchase cost. This is called purchase cost. We are going to find out the total annual cost. Okay, total annual cost. Now comes the holding cost. So total annual cost is what? Total annual cost is combination of purchase cost plus holding cost plus ordering cost. And you know what is the formula for holding cost? Yesterday we have discussed the formula for holding cost. Okay, the formula is this in front of you. This is the formula for holding cost here. This one you can write. Holding cost. Cost of holding, that is per unit cost of holding into the quantity what you are buying divided by 2, that is average quantity you are taking, and this is the formula for ordering cost. That means cost per one order into the annual demand by the quantity what you buy. Okay, so we'll find out this. Here is the working notes given. Did not worry about it. Every calculation is been done. Yeah, so here we are, the holding cost. The formula for holding cost is average inventory into holding cost for 1 unit of inventory per annum. So first of all, the question is how will you find out the average inventory? I already told you, whatever the order quantity you have divided by 2. So how much is the economic order quantity? So you can see the formula also. Average inventory form, here the formula is. We are discussing about the holding cost. This is your holding cost. Okay, so cost of holding, here we can see cost of holding into the quantity. So you want to maintain your inventory at EOQ. Am I right? Is it right or wrong? Hello.
Right, sir.
So this is what number of units ordered. So you want to maintain at EOQ. So we will take Q. This is what we are going to take the quantity as EOQ. Okay. So here we are going to maintain our inventory at EOQ. That is what divide by 2 can give us the average inventory what we are going to maintain. So the average inventory into ordering cost per unit, holding cost per unit. So what is that they have told about the holding cost? It is 15% of the purchase cost. So $30. So $30 into 15 units, $450 is our holding cost. We are going to take that here when we are maintaining our inventory at economic order quantity. Okay, now you will be confused. Sir, here we took 45 units. This is the annual demand. This is the annual demand what you have. Okay, but you always want to maintain your inventory levels at EOQ in the first case, in the first scenario. So there what we are doing is the average inventory what we are finding out is based upon the EOQ. Okay, you want to hold this quantity. Now ordering cost. So ordering cost are the annual demand is how much? 45 units, correct or wrong? Yes.
Yes, sir.
But you always want to maintain how much inventory at once? You want to order this much quantity, na 30 units. That is the economic order quantity. You want to maintain your inventory at this level. Your demand may be 45 units. That means 30 units you want to maintain, and next what will happen? You have to make more, you have to make additional order to get more 15 units, correct or wrong?
Correct, sir.
So how will we decide how many orders you have to make? To fulfill your annual demand when you are maintaining your inventory at EOQ. So we will divide that annual demand with order quantity. So how many orders we have to make? 1.5 orders. Okay, that means to fulfill this annual demand, and if you want to maintain the inventory at this level always, so you will maintain your inventory. Once you sell all this inventory, again you have to make an order. And how many units you have to order? 15 units. So that way what is happening here? Total one order, here half order. So can I say 1.5 orders? Yes. Now we will take the number of orders into the ordering cost. So we get 450. So this is what we have got. So 450 is our ordering cost. Okay, this is your purchase cost. This is the annual demand. You will buy the total 45 units in a year. Okay, and when you'll buy 45 units in a year, per unit what you are paying is $200. So this is the purchase cost. You always maintain your inventory at EOQ as per the first scenario. So you want to maintain always on an average 30 units. So what we saw is we found out the holding cost. So we took the average quantity, okay, that is 15 units or average inventory, and we multiplied that with the holding cost, and we got the total holding cost. And then we want to order our inventory. So how many orders we have to make to fulfill the annual demand of 45 units and maintaining the inventory at EOQ levels? 1.5 orders into the ordering cost. So ordering cost is like for one order it is 300. So 1.5 orders it will be 450. So we got all the cost and we added all the cost, and the total cost is 9,900. Scenario number one. Just have a look through this. If you have got any doubts, you ask me, then we'll go for the second scenario whereby we will be availing discounts. If things are clear, I'll move forward. Okay. Now let's target the second one. So second scenario is nothing but we are going to avail a discount of 3% when we want to maintain our ordering quantity to 60. Okay, when we want to maintain our ordering quantity to 60. Now, please try to understand this is very crucial. Okay. So what is your purchase price? Hello. What is your annual demand? Hello. What is your annual demand as per the question? The annual demand is 45 units. Okay. But this is what this is more than enough for you to suffice. That means this is sufficient for you. This is sufficient for you. Okay. But what is happening? If you buy more than, if you buy 60 units or more, then they are going to give you 3% discount. So now let's say we are buying 60 units or more. We will get discounts? Yes. That means instead of taking the 100% amount, they're going to take how much? 97%. Yes or no? Hello?
Yes, sir.
Hello? Are you following? Hello? You're following, correct? Yeah. So 97% they are going to charge. Okay. Now, see, there is no change in the purchase price. The purchase price is very clear here. The purchase price is very clear here. The purchase price is going to be the same. Okay. Because purchase price formula, you should understand what is the formula for purchase cost. So here I will show you the formula. Purchase cost, purchase priced into annual demand. This is not going to change. Now you will be having a dilemma or a question in your mind. Here we are maintaining our inventory levels at 60 units. So why are we not taking 60 units and multiplying with the purchase price? No, the purchase price will only depend upon what? What is that I have just pointed here? What is this? Annual demand. Hello? Hello?
Yes, sir. Annual demand.
Hear my voice? And there is a statement, purchase cost unaffected by inventory policy to be the same. So annual demand is 45 units here. I am getting a 3% discount and I'm taking 97% of this 8,730. Now we are going to find out the holding cost. Average inventory. Here we are maintaining 60 units. Okay. Divided by 2. So on an average 30 units into the 15%. Okay. Of 97%. 97% of the purchase price, because I'm getting 3% discount. Okay. On my purchases, I'm going to get 3% discount on my purchases. So 29.10 is my holding cost per unit. Okay. And then 30 units is what is my average inventory into the holding cost per unit will give me the holding cost. So I took the holding cost. Third point, ordering cost, number of orders. See, I have an annual demand of 45 units. Okay. Divided by 60. If I'm taking bulk units, I need how much orders I have to place? Only 0.75 orders. Are you getting my point? Previously my orders were what? 1.5 times, because I was maintaining the inventory levels at EOQ. Now I'm going for a higher amount of inventory. That is, I want to maintain my inventory levels at 60 units. but my annual demand is 45. So only 0.75 orders are more than enough for me to make fulfill this annual demand. Okay. I will make, see, I am getting bulk goods more than my limits. My limit is 45, but I'm getting 60 units. I'm ordering them 60 units. They are sending me 60 units. But for me, only 0.75 orders are enough to suffice this. So into the ordering cost, I get the ordering cost per unit. I get the ordering cost here. Okay. And I add. And my total annual cost is 9,828. So far, previously when I was maintaining my inventory at EOQ, I was getting, the annual cost was 9,900 and now it is 9,828. So what do you think? Discount is better or discount is not good? Discount is good here. Discount is better. That means if you maintain your inventory levels at 60 units or go for bulk purchase and avail a discount of, your annual cost is reducing. So this is good option, correct? Now let's go for the third one as well. So now the purchase price is this much for the annual demand what you have, and 95% because 5% you are going to get discounts. So 8,550. Okay, flat discount on the purchases what you make. And then holding cost, you want to maintain your inventory levels at 90, so the average number of units is 45. 15% is what is the holding cost you are going to incur on the purchase price. 95% of that you're going to take. Why? Because you are going to get 95% discount. Okay. Now, Asha, now you will be having a doubt. Sir, why are you not taking the discount in the ordering cost? Why are you not taking? Because the holding cost depends upon the purchase price and I'm getting the discount on purchase price. My ordering cost does not depend upon purchase price. Did I take purchase price anywhere? No, because I have already been given the ordering cost per order. That is 300. Okay. So this is not dependent on the purchase price. The holding cost is 15% of my purchase price. And purchase price, whenever I take, I have to take discounted purchase price. Okay. Because I'm availing discount on my purchases. So this is 28.50. So now you know 45 units, 28.50. This is my holding cost. And here 45 by 90, only half of the orders I have to place. And my ordering cost is 150. So when I add up these two, my cost is 9,982. Let's see what is happening. 9,982 and here it was 9,828. Here it was 9,900. So this is way ahead. That means it is more. Here I am incurring more holding cost, very high holding cost, because my order size is very big. So when my order size would be, of course, that will drive my holding cost. So here, this is not advisable. So the best is because I have the least cost there. Okay, better than EOQ. Fine. So giving you this entire question, and then like you can go ahead. If you have got any doubts, you can ask me. I will go for the next topic, economic batch quantity. Come on, have a look to this. Any doubts, please ask me. Now, please tell me, are you following or not? I'm asking you again, are you following or not? Are you able to hear my voice and everything clearly? Hello?
Yes, sir.
Yeah. Can you hear my voice, Hamsika? Hello? Okay, just follow this. So who once after having a look through this, you can confirm me whether like it's okay, then I'll move forward.
Okay.
Hello. Yeah. So we'll go for the next thing. So minimum total costs. One more question is given to you. Using the same information as used in the basic EOQ, calculate the minimum total cost assuming following discounts apply. Okay, like that means this is the basic EOQ question we did, correct? Where is the basic EOQ question? Basic EOQ question is here. Yeah. Where is the basic EOQ question? Economic order quantity. Question correct? Yeah, this is the basic EOQ question. So I think I have given you the task to do this. Have you done this one, Hoor? Hello? Have you done this? Hello? Who did you finish this task? Hello? So you should take the like in the sense you should take this information. Just a second. You can take this information, demand 150 units per month. Okay. And they have given the cost per unit, ordering cost and holding cost, 18% per year of inventory value. Okay. Inventory value is nothing but this one. So you can take this information whereby you can easily find out the EOQ. There's nothing to worry about because it's a simple question. And you can add this extra information to that question. The extra information is here. That means 150 units is what you have to order, it seems. So if you are ordering more than 150 units, then they are giving you 1% discount. If you are buying 300 units or more than that, they are giving you 2% discount. If you are ordering 800 units and more than that, they are giving you 4% discount. So the same question, what we did in the previous one, the same kind of question is here, and you have to solve this as an activity. Okay. Now, economic batch quantity. What is economic batch quantity? What's the difference between economic order quantity and economic batch quantity? If you order in 500 units, then EOQ is better for you. But if you are going for very high purchases, that means very bulk purchases. The purchases are of of like mammoth quantity or huge quantity of material you are buying, then economic batch quantity comes into picture. For example, a company may wish to order a batch of 500,000 components to secure supply, whilst receiving delivery to match the weekly production demand for the components of 50,000. So, here you are going for a very high order or a very bulk purchase. So, in such kind of scenarios, EBQ is advisable to find, not EOQ. Okay. So before that EOQ was followed, but as you know, the businesses in today's world are such like bulk quantities are also bought, okay, purchased and sold. So EBQ has come into picture. It's a small amendment to the EOQ. Okay. So EBQ formula is under root 2 COD by CH. But one small thing what they're doing is in CH, that is holding cost, they're taking 1 minus the annual demand divided by the production rate or delivery rate per time period. Okay. This formula you have to apply. And again, the holding cost here is nothing but the average quantity minus into 1 minus the annual demand by the production rate into holding cost. This formula you have to apply. Okay. So now I'm giving you a question to find out this, but first you have to write the formula, write down the formula who, and then solve this question. Write on this formula, and then you have to solve this question. Okay. Are you following what I'm saying? Hello.
Yes, sir.
Yeah. I hope you have written the formula. So I am giving the question to you, Hur. Can I go ahead?
Yeah, yeah.
Just do this question. I'll solve. We'll solve. See, if we are done with this EBQ, I don't think much of the things are left over for us to discuss because inventory valuation methods are there. I can give you all this as homework. I don't want you to tease this one. Why? Because we have already done this in the F3 book. So all these valuation methods have been done. You can do them as homework and rest of the activity. We can start labor cost tomorrow. Is it okay, or should you want me to explain this? Hello?
Yeah, sir. Maybe you can just say the like a little bit summary type if you can do it.
Yeah. See, absolutely fine.
Yeah.
If you want, I can, no problem.
Yeah, just like
Like
a
I have already,
summary.
we have already did that in the F3 now. So same thing is repeated here. You have nothing more to do or nothing less to do that one. Like same thing is given. So I'm saying if you can follow that video and do this, that's okay. Otherwise, I will explain. Not a problem.
Yeah, can you just send me that video once again so I'll just follow it?
Yeah. I have very good solved videos of EOQ method. This one like
Yeah.
inventory valuation methods. I can send you. No problem.
Okay, sir.
Fine,
Okay.
that's not a problem. If you want, I can explain here also, not a issue.
No,
You
no, just
can
send
do
me the
this.
video. I'll follow it.
Okay, you do this. You'll
Yeah.
see how it goes, and we'll see that. Yeah,
Okay,
I'm
sir.
waiting. Yeah. Okay, now let's calculate this one. So the formula what we saw was under root 2 CO D divided by CH, but 1 minus D by R. That was the formula. We'll put the same thing. The annual, like, company is able to manufacture its own components for inventory at the rate of this much units a week. Demand for the component is at the rate of this much. So demand is very clearly given, annual demand. So 2000. Okay. And what we say, the ordering cost, setup cost for each production run are 50. Holding cost, the cost of holding 1 unit of inventory is this. So we will take this one. This is the holding cost. Okay. Setup cost for each production run. So in is like, you know, here the production is going on. Okay. So like setup cost is nothing but like for production or to fulfill some order, they are setting up some machine. Okay. So to fulfill some order, they'll set up some machine and for that they are incurring 50. So that comes under ordering cost.
Yes.
Yeah. So we will take that ordering cost. That is a machine setup to fulfill some orders. So ordering cost, annual demand, ordering cost, holding cost, 1 minus the annual demand divided by the production run. They do it like 4,000. Here
Yes.
clearly things are given like a manufacture its own components for inventory at the rate of 4,000 units a week. Okay. So you got the EBQ as
20,000.
20,000 units. Okay. This activity is a homework for you. So here like EOQ and annual holding cost, we have already discussed everything. You need to do this activity. So see who actually, if you do the activities, you will ask me your doubts. Okay. If you
Yes.
are coming with doubts, I will be very happy and will be in a will be like happy and glad to explain your doubts. Okay.
Yes.
Now coming to inventory valuation methods, that means you can find out the COGS and the cost of the ending inventory of the inventory. Okay, with the help of certain valuation methods. The first method here what we can discuss is FIFO, second is LIFO, and third one is APCO. So these are the methods with the help of which you can find out the cost of goods sold of the inventory. When you when see what happens is this is called the perpetual system, not the periodic system. The perpetual system is nothing but you have layers of inventory. Every day you buy goods, every day you buy some like quantity, and like in a day or two you also sell certain quantity, again you buy, again you sell, again you buy, again you sell. So what you're doing is you are maintaining you are using these methods of perpetual system, perpetual inventory valuation methods to find out the cost of goods sold and also the ending inventory. Okay. So as a matter of this thing, what we can do is the same method is followed in the like F3 book, but okay, fine. I will try to explain it the first one so that you get a good idea. Okay. And then you'll be able to apply this. Fine. Let's do
Yeah.
the first one. We're going for the FIFO method, which is first in first out. So what has come to you in at the beginning, you have to sell that first. Okay. Now, so opening balance, then receipts, issues. Receipts is what you're buying, issues is what you're selling. So let's start with the opening balance. So okay, like they have their own way of doing. So I have certain videos whereby we have done it in a different way. It was more easy, but okay. So like how much you have to issue? 200. Am I right? This is what you have to sell now on 4th May. Hello.
Yes.
So we will take this. On 4th May, you have to sell these many units. Okay. So what you would do is you would sell from the inventory what you bought first. Okay. So you had 100 units in the beginning. So you will sell these 100 units first. To fulfill the order of 200 units, you have to again take more 100 units. So you will take more 100 units from this, which you have bought. So you are left over with how many units here? 300. Correct or wrong? Hello. See, you have to sell 200 units to customers. That is the order you have. So to fulfill that order, you can use this 100 units now, which you bought first. This is FIFO, first in, first out, which this was first in, this will be first out. Then rest of the 100 units you will be taking from this lot. Okay. This lot what you're taking costs you $2 per unit. This lot what you're taking costs you $2.10 per unit. So you will take 100 units from this. So 100 this, 100 from this. So leftover is how much? 300 at the rate of how much? 2.10, correct? Now
Yeah.
we are selling this now. See. So we took this one opening balance and this one, and 200 units are sold. Okay. You know this, and then you the cost, total cost is 410. Now 11th May again you have to sell how much? 400. So what we can do, we can sell this 300 at the rate of 2.10. What we have, this will become 0. Okay, this is sold out, and rest you can take from this 300 which you bought on 9th May, which is a lot of $2.12 per unit. So this one, if you take 100 from this, 200 will be left over at the rate of 2.12. You agree? Hello?
Yes, sir.
Yeah. So we are able to replenish or finish that order. Okay. And then the cost is this much. Now, this is the same question of F3 book. Same question. They have just cut, copy, paste. After explaining this FIFO, I will give you the video of that inventory chapter. Okay. You can go through this. Fine. The same question. They have just taken the same question. Now, coming to the last order, we are left over with 200 here. Again, in the, on 20th May, you have an order to fulfill of 100 units. So you will take 100 from this 200, which is at the rate of 2.12, and you will be left over with 100 at the rate of 2.12. 100 units will be left over. Okay. Your order is done. See. Okay. This is the cost. And what is happening is at the end, this 100 units you are having, and this 200 you are having. Okay, at the rate of this. So you will take this two. Just a second, they are giving the closing inventory as 200 now. So this is what you have finished. Here you are having 100. So you had this much order. Okay, sorry. 18th May receipt is also there. Extremely sorry. Yeah, this I didn't see. So this at the rate of 2.40 is there. Okay. You will be showing at cost only, not at the market value. So this 100 at the rate of 2.40. So the cost is 452, and you are having the closing inventory of 200. The entire cost is 1916. Okay. This is the inventory cost. Okay. So the cost of metal issued plus the cost of closing, plus the value of closing inventory equals the cost of purchases. Okay. So how will you find out the purchase cost? See, COGS. What is the formula for COGS? Opening inventory plus purchases minus closing inventory. Correct? So cost of material issued. So I will write down the formula for purchases. That is we will take COGS, okay, minus opening inventory plus closing inventory will give you purchases. Okay. So cost of material issued is this, whatever you are selling, and plus the value of closing inventory. Okay. I don't know what they're doing. Purchases means you have to just remove this. But what they have done is we don't have opening inventory at all here. Fine. So what will be the cost of issues? This will be the cost of issues, that is COGS, and the value of closing inventory is 452. Fine. Okay, leave this formula. Here it is here there's a better explanation for this. That is more than enough to understand. See, this is all you sold, correct? So this is all you issued the inventory. So what was the cost of issue for you? Hello? Hello?
Yes, sir.
1464. And what is the closing inventory? What you have at the end? 452. So if I take this, it is closing inventory cost. This is cost of issues. And when you add this two, you get the value of the inventory at the end of the period. Okay. and this will become the opening inventory for the next period. Okay. So the cost of material issued plus value of closing inventory equals the cost of purchases. So I'm writing here cost of issue, that is what you have sold. That means you have purchased plus closing inventory which is left over with you. That means you have bought 100 boxes. You have sold 80 boxes. Okay. And you're left over with 20 boxes. So the 80 boxes what you sold, for that the cost what you incurred is cost of issue, which in this case is this. And the closing inventory is nothing but the leftover boxes what you have, which in case is this. So if you add this two, you get the purchase cost of all the boxes. Okay. So the cost of metal issued plus the value of closing inventory equals the cost of purchases plus the value of opening inventory. Okay. Now this is what is the final conclusion. We should not take the market values. I have already told you that we should take only the historical cost. This is the LIFO method. Let us discuss the LIFO method. Last in, first out. What is coming last? You have to sell it first. Okay. My charging is only 16%. Okay. Just listen to this. So we will start with the issues 200 units again. So 200 units, of course, you have to sell. But what you have to do is you should not take from the opening balance. You should take from the last one which you purchased, which is this. So from this, I will take 200 units. Okay. And sell it. That is this lot. And that is more than enough to fulfill my order. So here, if I take 200 units, I am left over with 200 units at the rate of 2.40, this lot. And I am also left over with this. Okay. I'm not touching that. Right, so I can do this and I have done that. Okay, 200 at the rate of 2.10. Again, I have some order on 11th May. So here what I can do, I have to again touch this one. Okay, so I'll take 300 from this. I'm left over with 100 at the rate of 2.12. But that is not enough for me to fulfill this order. I will take more 100 from this. That will become 400. So I'm left over with 100 at the rate of 2.10. Okay. This was one. This was second leftover. So you can see I'm taking like 300 at the rate of 2.12. I'm left over with 100. And I'm taking 100 at the rate of 2.10. I'm left over with 100. Okay. If I'm taking 100 from this, I'm left over with 100. So I'll take that. See. 300 at the rate of 2.12 and 100 at the rate of 2.10. And I have this cost. This and this is done. Last one. Again on 18th May, I have to sell 100 units. So I will sell this one, which I have from the beginning, 100 at the rate of 2.10. You can see that. What? Oh, okay. Last one. Okay, I have to check the last one. Sorry. Last in, first out. No? So first I have to check this one. Okay. So at the rate of 2.40, extremely sorry. This one I will sell first. This is LIFO. So I took this. Okay. And then I have this. So now it is clear, Hoor. Any doubts? Hello.
No, sir. No doubt.
Absolutely fine. Correct.
Yeah.
So now I am left over with this one, the 100 which I had in the beginning, and last one, any leftover 100 here I had, and 2.10, and here also 2.12 something is there. No? 2.10 is what I am having. And again, did I buy something? This one I bought. Again, they're showing 100 at the rate of 2. Okay, let me see. Oh, I did not touch this opening balance at all. This is already there with me. So this one I will take because I did not touch this at all. So this inventory is still there with me. That one. So this two again gives me closing inventory. So this is my cost of issues. This is my closing inventory. Cost of purchase. Okay. If I have opening inventory also, I'll add up. That will also become my cost of purchase because I sold that also, but that already I have included in cost of issue. So why again I need to like include that? Already I have taken that, na? The one which I was left over with, I have already considered in the closing inventory. So this is my cost of purchase. Okay. Again, I have got 1916. Okay, I'll move forward. AFCO method. This is the final method, which is the conclusion of this chapter. So AFCO, what are we going to do? Again, we are going to issue this. What we are going to do, we are going to take this issue. We are going to take from the beginning, we have opening inventory of 100. Okay. And this is like at the rate of $2, it is costing me 200. I have again bought 400 units at the rate of 2.10 and that is 840. So I have total 1040 worth of like inventory. Okay. And I have how many units? 500 units in total. And when I just divide this with this, I get the unit per unit cost of the inventory. Okay. Now I have to sell 200. So I will take this average cost, that is 2.08. Okay. I took this and it is cost 200 into 2.08 is costing me 416. I will directly subtract. I'll get 624. And from 500, if I remove 200, I am having how much inventory? 300. And the cost is 2.08. When I divide this with this, I get 2.08. Okay. Again, I have purchased 300 units. So this 300 and 300 gives me 600. And here, but 300 I have bought at the rate of 2.12. That is this, and this two added up will give me 1260. 1260 by 600 gives me 2.10. Again, I have bought I'm selling 400 units. Out of the 600, I'll subtract. I'll get 200, and I'm selling at the rate of 2.10. Okay, so 400 into 2.10 is 840. And that subtracted, I'm getting 420 and I'm left over with 200 units, and 420 by 200 is 2.10 again. Again, I bought 100 units. So 200 plus 100 is 300. I bought it for the price of 2.40. So 420 plus 240 is 660. 660 again by 300 is 2.20. Okay. So 660 by 300 is 2.20. Okay. That means 300 into 2.20 is nothing but 660. That you can understand. And what happened is, like here, again I have to sell 100 units. So I'll sell at the rate of 2.20. Okay. This into this multiplied. So 600 minus 220 is how much? 440. Okay. And I'm left over from 300. If I sell 100, I'm left over with 200. So 440 by 200 is 2.20. Okay. So this is what is the final closing inventory cost I have, and this is the cost of issues. Okay. So these two clubbed together, I'm again getting my purchase cost. Okay. And every method is giving me the same answer, but the ways are different. Okay. So this is the way you do the AFCO method. Fine. That ends the inventory chapter. And you have this activity to do. Please do this. And rest things are done for this chapter. Now we will start accounting for labor in the next class. That is tomorrow. Okay. So I advise you to do all the activities. Let's begin with this chapter tomorrow. Okay. Thank you. Any doubts you can just bring to my notice tomorrow. Thank you.
Yeah, sure.
Okay. Thank you. Thank you.